Good morning and welcome. You're watching Market Cafe on ET Now. I'm Harsh Saita and with me is Ankita Saxena. Ankita, markets have been zippy, especially Indian markets.
Absolutely.
We saw that yesterday, absolute whipsaw in trade. But
Yes.
talk to us about how global markets are. How are US and Europe looking?
Well, even the European markets look pretty directionless. I mean, just look at the rally, and then yesterday the markets fell, obviously. So yesterday the stocks traded lower, pausing the January rally as investors are now bracing for the busiest week of earnings season and a possible interest rate hike from the Federal Reserve. The Dow Jones Industrial Average declined 260 points and the S&P 500 fell 1.3%. The Nasdaq Composite dropped 1.9% in trade yesterday. Now, information technology and communication services were among the laggards in the S&P 500. Now, the mega cap tech stocks such as Meta Platforms and Alphabet were about 3% and 2.5% lower respectively. Now, remember, the Federal Open Market Committee meets on Tuesday and Wednesday when the Fed is expected to hike rates by 1/4 of a percentage point or 25 basis points. At least that's what the market is penciling in. Something that the whole world, the investors, everyone will be closely watching. Now, European markets also closed lower. The Pan-European Stock 600 closed down 0.2% with most of the sectors in the negative territory. DAX was down largely flat, but was down 0.1%. CAC down 0.2%, and FTSE, however, was up actually 0.25%. So very choppy, very directionless. That's the global handover that's coming in. Harsh, tell us, what's the crude looking like?
Well, crude is looking cautious, if I can call it, Ankita. We are seeing crude prices come off from those highs. We did see it go well above the $80 a barrel mark. Now it's below $78 a barrel. I'm talking about WTI, of course. And Brent too is below that $85 a barrel mark. Good news for India. But let's look at what the reasons for this possible fall are. One is, of course, they're being cautious ahead of that FOMC meet and the outcome of that. Any change, any tweaking to that 0.25 percentage point hike will obviously impact crude because it will impact growth going forward. It will signal a more hawkish commentary with regard to growth, and that will impact crude. So largely that's where we are placed with regard to crude. Of course, there is also the OPEC Plus meeting. Lots happening this week, right? There is the OPEC Plus meeting as well. There's also Russia supply increase that's happened in the market. So all those factors are impacting crude prices on ground, and we are seeing that. Crude prices have fallen off those highs, almost 2 to 3%, almost 3 to 4% in fact down from some of those recent highs, as late as last week. So that's where we're at. Let me also mark out the SGX Nifty. It's in the green, 0.33% in the green, despite largely negative cues that Ankita has highlighted. But let me take it straight to Ankita. Ankita, take us through what are the events to watch out for today.
Well, as you mentioned, Harsh, it's an action-packed week. I mean, everybody would be glued to the television screens. We, of course, have the union budget coming out tomorrow, and then, of course, we have the Fed meeting as well. Now, today we have the Indian economic survey that's due today. We also get to know the fiscal deficit numbers. We also have China manufacturing PMI, a non-manufacturing PMI data that's coming out. Of course, the earnings season is going on. So we have Sun Pharma, we have Coal India, UPL, and Power Grid that's coming out with their Q3 numbers. Corporate action, well, the Adani Enterprise FPO closes for subscription today, and we also have Shriram Finance board meeting that will be considering the approval of periodical resource mobilization plan. We also have Vodafone Idea holding a board meeting for the issue of preferential OCDs to ATC and to convene EGM to seek shareholder approval. So these are the events that you need to watch out for in today's session.
Well, thanks so much for that, Ankita. Let's quickly move on to what's happening across global markets as well as geopolitics. The energy giant BP predicts oil and gas will become a dramatically smaller part of the global energy mix by 2050. Meanwhile, zero carbon alternatives like wind and solar energy will continue to increase their penetration. The company said the share of fossil fuels as a primary energy source will fall from 80% in 2019 to between 55 and 20% by 2050. That's a dramatic fall, Ankita.
Right. Right, and moving on, the World Health Organization said that COVID-19 remains a global health emergency as the world enters the fourth year of the pandemic. But the WHO's Director General said he was hopeful that the world will transition out of the emergency phase of the pandemic this year. The WHO's Emergency Committee, says that the pandemic still remains a public health emergency of international concern, the UN agency's highest alert level.
Well, yes, and more than 1,000 flights into and out of the United States have been cancelled due to severe winter storm. About half of these flights were from Southwest Airlines. Low-cost carrier Southwest also faced US government backlash earlier this month for cancelling 16,700 flights over the holidays. The fresh cancellations hit an aviation sector recovering from a nationwide ground stop imposed by the Federal Aviation Administration, which is the FAA, over a computer issue.
And a Taliban suicide bomber blew himself up in a mosque packed with worshippers in the high security zone in Pakistan's Peshawar. The attack killed at least 63 people and wounded more than 150 others. Over 300 police officials were present in the area at the time of the blast, and the bomber breached the high security of the mosque inside police lines where 4 layers of security were in place.
Well, and Boeing said it plans to add a fourth 737 MAX production line in the second half of next year as it targets higher output of its best-selling plane. Boeing has been eager to increase production of the 737 MAX, but the company's CEO has flagged supply chain concerns. Meanwhile, the last Boeing 747 that reigned as Queen of the Skies for more than 5 decades will be delivered to Atlas Air today.
And President Biden administration said it will end COVID-19 emergency declarations on 11th of May. This is nearly 3 years after the United States imposed sweeping pandemic measures to curb the spread of the illness. Biden has repeatedly extended the measures which allow millions of Americans to receive free tests, vaccines, and treatments. The White House said the declarations would be extended again until May 11th before being terminated.
Well, yes, with all those market veterans who are going to try and decode the budget for us, we'll try to do a little bit of decoding ourselves. Of course, the upcoming union budget coming up in a couple of days now. Last full-fledged budget of the present government in the light of the fact that general elections are coming up in 2024. Lots of expectations, various sectors having various expectations on the upcoming budget. And we have Anurag Shah, who's caught up with citizens at Mumbai's iconic Queen's Necklace Marine Drive to understand what the Aam Aadmi wants. Listen in.
First and foremost, this is the final full-fledged budget of the present government. In light of the fact that in 2024, the general elections are coming up, and in the year 2023, most of the states are going for elections. So this particular election will be populous. It will be fiscally more beneficial. That's my take on it. A couple of other points which should be taken into consideration, which I believe there would be some traction on it, is the R&D spend more so. The idea of inspiring or encouraging the domestic sector to spend more on R&D. There could be some reliefs coming in there. Secondly, private sector investment, there would be some incentive coming in there to attract more FDIs in India.
Sir, as you track housing, banking, real estate sector, so according to you, what will be the main thrust in budget regarding these sectors?
I think the main thrust of the budget should be to ensure how banking, finance and real estate sector both can come out of the reeling difficulties that they've been having. And I think one common point for these can be the home loans that are there, because this is something, one of the safest portfolios that a bank or a financial institution in India can have. And with the increasing interest rates and the increasing repo rates by RBI, home loans have become more expensive. One benefit that the government can give now is maybe provide for deduction of income for the amounts paid for interest on the second homes, and also increase in the limit on the first home interest rates, which earlier used
2 lakh rupees presently.
Yeah. which is around 1.5 lakhs for interest and 1 lakh rupees for principal presently. But for second home, you don't have any other separate benefits. You can maybe bring that benefit back that was there, and I think this will help boost both real estate and banking sector by increasing the purchasing capacity of the prospective home buyers or somebody who wants to invest into a second home, and gives a lot of boost to indirectly to the infrastructure also by increasing the payments in property taxes, etc. And government, I think, somewhere have been conscious about it by with their Pradhan Mantri Awas Yojana that they've been dealing with. I think there's some more incentive required, and as far as loss of tax is concerned, I don't see that happening, because once you take a home loan, if you are providing a benefit to the home buyer, you're somewhere making the money on the interest income of the banks, so that is being taxed over there. Or if not the banks, then from wherever the bank is picking up the money from the market. So I think somewhere directly or indirectly you cover your taxes, but at the same time give that benefit and boost transactions in India.
Well, the Aam Aadmi has spoken there. Now, just one day to go for the union budget, all eyes out on Nirmala Sitharaman. And now we at ET Now believe that we need to simplify the jargons for our viewers to understand the budget better. Now, what are the two kinds of taxes that the government receives income from? We are here to simplify it for you. Former Niti Aayog Vice Chair is here to explain what that means. Listen in.
So the direct tax is the tax which is levied on the personal incomes or the corporate incomes in the economy. That's direct tax, and that's normally also known as income tax, personal income tax or corporate income tax. That's the direct tax, and this tax is generally graduated, that it becomes higher proportion of your salary as your income rises, not say as your income rises. So that's and therefore it's called a progressive tax. The indirect tax is all that tax which is levied on the commodities, on your consumption, which is generally the same for all income classes. And the best example now of the indirect tax is the GST, the goods and services tax, and therefore that does not make a distinction whether a commodity is being consumed by the rich class or the poor class. And therefore sometimes the indirect tax is also seen to be a regressive tax, because its incidence is the same across all income segments of the population.
Okay, and what is the central?
Yeah, absolutely. So clearly broken down by the Niti Aayog Vice Chair. Welcome back. You're watching Market Cafe on ET Now. Let's quickly take you through what a couple of earnings candidates that have come through, and we have Ashesha with us, who's going to talk about Radico Khaitan. Good morning, Ashesha. Talk to us about what's happening there.
Yes, Radico Khaitan is in focus today, and it is not because of earnings. It is because the Uttar Pradesh government has tweaked its excise policy. It has allowed a 15 to 16% price increase for country liquor prices at an EDP level, and the policy will be in effect from the 1st of April 2023. Radico Khaitan is the market leader in the country liquor segment in the state of Uttar Pradesh, and it has a total, as a percentage of total revenues, it stands at about 16%. For Radico Khaitan in particular, country liquor segment was struggling from a profitability standpoint over the past couple of months, and now this step has come through, and it will perhaps be a breather for this particular company. As far as raw material prices are concerned, they've also gone up a whole lot, and Radico's EBITDA margins too was particularly impacted because of the raw material price increases that we have seen in the recent past. As far as analysts are concerned, they do expect sharp EBITDA accretion in FY24 on account of the news that has come through. Price hike covers the impact of inflation in raw materials that we have seen in the recent past, and they expect the segment to revert to its EBITDA margin levels of about 9 to 10%. So price increases with effect from the 1st of April and consequent margin expansion that we are expected to see is why Radico Khaitan is in focus today.
Well, right, that's why Radico Khaitan is in focus today. Apologies for that. But let's quickly move on. Coal India is also set to declare its Q3 numbers. Let's go straight to Ashesha back, and Ashesha, talk to us about the Coal India numbers.
Yes, so higher e-auction realizations are expected to aid numbers for Coal India this time around, both on a sequential basis as well as on a YOY basis. As far as EBITDA per ton is concerned, it is expected to expand by about 34% on a year-on-year basis and about 16% on a sequential basis. Revenue is expected to come in at 33,900 crores for Coal India this time around, which will be an expansion of about 14 basis points on a sequential basis. As far as margins are concerned, we are expecting them to come at about 28.4%, which will be an expansion of about 450 basis points on the margin fronts on a sequential basis. As far as the coal offtake is concerned, remember Coal India reported coal offtake of about 176 million tons, which is up marginally by about 1% on a year-on-year basis. Meanwhile, Coal India ended 9-month production at about 479 million ton, up 15.8% on a YOY basis, and management has guided for full year production at about 700 million tons. As far as other internals are concerned, EBITDA per ton is expected to come in at 525 rupees per ton, which will be an expansion of about 34% on a year-on-year basis and about 12% on a sequential basis. Management guidance with respect to coal availability for e-auction will be the key to watch out for. Apart from this, management commentary on national coal wage agreement and possibility of FSA wage hike in the coming quarters will also be the key to watch out for. All in all, on a sequential as well as on a year-on-year basis, e-auction realizations are expected to aid numbers for Coal India this time.
Well, thank you for the details, Ashesha. Now we'll quickly move on. MSCI is going to conduct its quarterly redrig on February the 9th, which is going to be effective from March. Now, my colleague Somit will join us to tell us which stocks may be included and the inflows that are expected. Over to you, Somit.
This MSCI quarterly index review will be announced on February 9th, and the same will be effective from 1st of March. And MK Broking has come out with this list of probable inclusion and exclusion from the MSCI India Index based on yesterday's closing price. Now, according to them, they are not expecting any high probability exclusion or inclusion from the index, but there are 3 stocks which have a low probability of inclusion or exclusion. On the inclusion side, they are expecting Bank of Baroda has a low probability of inclusion because it's marginally qualifying on both size and liquidity criteria. Now, do remember earlier the stock was a high probability inclusion, but due to the change in the share prices and liquidity, now it's fallen to a low probability list for MK Broking. Also, on the exclusion side, they're expecting Biocon and Industars to be excluded from the MSCI India Index because they have crossed the lower cut off of the threshold of exclusion, and based on this, they're expecting Bank of Baroda, if it gets included in the MSCI India Index, to have a weightage of close to 0.4%, which could lead to inflows to the tune of close to $137 million US, which is nearly 2.2 times its average daily volumes. And on the exclusion side, for Biocon, they're expecting weightage reduction of around 0.14, which would lead to outflows of close to $46 million US, which is nearly 5.4 times its average daily volumes. And in case of Industars, our weightage is expected to come down by around 0.13%, which would lead to outflows of close to $43 million US, which is nearly 9 times its average daily volumes. Now, do remember Bank of Baroda was one of the stocks that had a high probability of inclusion in the MSCI semi-annual review also. However, the stock failed to make the cut in November 2022, and now also it seems that the stock won't be included in the MSCI India Index.
Well, yes, and we also have Adani, of course. The management is confident of the FPO sailing through. On day 2 of the FPO, that's seen a 3% subscription from retail investors. Surprisingly, Abu Dhabi-based IHC Capital has committed more than 3,000 crore in the FPO. The follow-on offer will close today. Swami, tell us more about that as well.
Well, India's largest follow-on public offer of 20,000 crore rupees today is the last day to subscribe for that. Adani Enterprises had announced this FPO, and the price band for this FPO is 3,112 to 3,276, which is still at a discount of close to 7.5 to 12% compared to the current, which is still at a premium of around 7.5 to 12% compared to the current market price. Now, if you see the subscription details that have come in so far, the anchors have invested around 5,985 crore rupees. Adani Enterprises will be raising close to 3,260 crore rupees from IHC, which means that so far the the FPO has seen subscription of close to 46%, and other investors have subscribed for nearly 3% so far on the end of day 2. And today is the last day for the same, which means that total subscription that has come in so far for 49%. The remaining 50% is yet to be subscribed. Now, what is Adani's relation with IHC? In May 2022 also, if you see, IHC Capital had invested close to 15,400 crore rupees in 3 Adani Group companies. 7,700 crore was deployed in Adani Enterprises, while 3,850 crore rupees was deployed each in Adani Transmission and Adani Green. And now again, the IHC is investing close to 3,600 crore rupees in Adani Enterprises. Now, IHC Capital is an Abu Dhabi listed company which focuses on non-oil business sectors, and this is its third or fourth investment in Adani Group companies.
Well, thank you for that, Somit. We'll quickly move on to the stocks that you need to keep an eye out on in today's trading session, and for that, we have Vamakshi in the studio. Hi, Vamakshi. Tell all our viewers what are the stocks that we need to watch out for.
Well, first of all, a very good morning to both of you all. Let's first kickstart off with some earnings. Now, we have a strong set of numbers that came in from BPCL. Revenue saw an uptick of nearly 4% sequentially, but it was the net profit that the company reported of nearly 1,960 crores versus a loss of 304 crores sequentially that stood out for the company. EBITDA margin also increased from nearly 1.2% to 3.6% sequentially. So, all in all, a good set of numbers coming in for BPCL. On the other hand, we have a weak set of numbers coming in for Green Panel. Revenue saw a downtick of nearly 1% on a year-on-year basis, but it was a net profit that saw a gash of nearly 41% on a year-on-year basis. It is down from 63 crores to just under 40 crores. EBITDA margin also saw a decline of nearly 400 basis points, down from nearly 26.1% to just 21.8%. Apart from that, we also have a weak set of numbers coming in from Aztec Life Sciences. Revenue saw a decline from nearly 173 crores to 117 crores, while the net profit actually saw a deep decline of nearly from 24 crores to 0.8 crores on a year-on-year basis. Apart from these stocks, we also have a few stocks in focus on the back of some news flow. We have KEC on our radar. Now, the company has secured new orders of nearly 1,131 crores across its various businesses. LIC is also in focus. The company yesterday came out with a note wherein they said that the total holding under equity and debt is nearly 36,000 crores under the Adani group of companies, and LIC is sitting on a mark-to-market gains of about 25,000 crores for the equity investments made in Adani group of companies as on Jan 27th. Apart from that, we also have a few Adani group companies in focus. The price bands for Adani Transmission, Adani Total Gas as well as Adani Green Energy have been reduced from 20% to 10%. Apart from that, lastly, we have SRF and Gujarat Fluorochemicals in focus. SRF has approved a project for production of a range of specialty fluoropolymers at a cost of nearly 600 crores. Now, Gujarat Fluorochemicals is in focus on the back of this because Gujarat Fluorochemical is already an established strong player in this place. So, a bit of a competition that is now coming in from SRF.
Well, thanks for that, Vamakshi. Of course, you're also going through all the brokerage notes that have come through today morning. So, talk to us about what are the key notes that you're looking at.
Well, absolutely. Let's first start off with Tata Motors. What Citi believes is that revival is in sight across all its segments. JLR is getting over past turbulences, and the domestic business particularly continues to be robust. On the back of that, they've actually gone ahead and resumed coverage on Tata Motors with a buy rating. They've given a target price of 545 per share, which actually implies an upside potential of nearly 20% or rather over 20% from the current market price. Apart from that, watch out for SRF as well. We have a note that has come in from Morgan Stanley. Now, they believe that the third quarter was a good beat. They saw an upbeat performance in fluorochemicals particularly. The packing segment also saw an improvement on a sequential basis. So, on the back of this, we actually have Morgan Stanley maintaining an overweight call on SRF given a target price of 3,454 per share, which actually implies an upside potential of over 55% from the current market price. And lastly, we will be watching out for PNB, we have a note that has come in from Morgan Stanley. Now, the company reported its Q3 numbers, and core revenue growth was actually 1% above Morgan Stanley's estimates, but the PAT missed estimates on account of higher NPA provisions. They're expecting continuing gradual improvement in the stock's performance as well. So, on the back of that, Morgan Stanley has actually gone ahead, maintained an equal weight rating on PNB, given a target price of 60 per share.
Well, thank you for all those brokerages coming in, Vamakshi. Do keep an eye out on all these stocks mentioned. Moving on, engineering and construction major L&T's Q3 results have come in line with the analyst estimates. The company has also reported a 4% increase in its order books as compared to the last quarter. My colleague Lisa Fernandez, who tracks the sector closely, is here to break down all those numbers for us.
Well, Larsen & Toubro reported largely inline set of numbers for both revenue and PAT. However, EBITDA and margin that saw a miss in estimates versus the ET Now poll. Revenue grew 17% on year-on-year basis, and that was due to improved execution in the infra projects and also continued momentum in the IT and tech services. While EBITDA grew 12% year-on-year basis at 5,073 crore, margin that was down at 10.9% versus 11.5%, which it saw a year earlier, and that was mainly impacted by the IT and tech service segment. Remember that the segment contributes like around 23% of the revenue, and the IT segment saw a margin decline at 19.2% versus 23.6% earlier, and it was mainly due to the one-time merger integration expenses at LTI Mindtree. Employee expenses also rose like 25% year-on-year basis owing to the wage hikes. Talking about the net profit, that was in line with the ET Now poll. However, it was below what the street estimated. Adjusting for an exceptional gain of 97 crore, it was mainly due to the divestment of the mutual fund business. The PAT stood at around 2,456 crore. PAT was also higher due to other income that grew 32% on year-on-year basis at 755 crore. Well, talking on the order front, that was healthy and it grew at 21% year-on-year basis. The order received was around 60,710 crore. Management stated that the private capex is expected to pick up in segments such as the green energy transformation, industrial parks, emerging technologies, and also the data center. Management also stated that on the international order, which is like 25% of the order book, GCC nations are looking to invest in sectors other than oil, such as the industrial parks and also the green investment. Management also, lastly, the management also stated that they are confident of achieving the 12 to 15% revenue growth and the order inflow.
Well, thanks for all those details, Lisa. We'll quickly move on. Tech Mahindra also declared its Q3 numbers, while profits have come largely in line with what the estimates in the market were. Revenues have seen a slight increase, coming in at around 13,735 crore. The tech company has also seen deal wins of almost $800 million in the third quarter. And while attrition has contracted to 17% versus 20%, quite a sharp decline, so that's largely the positive coming through. Let's, of course, now we're completely out of time on this show. Ankita?
Yes, Harsh, we are completely out of time on this show, but we have the market coming up for you, which is completely action-packed with an action-packed lineup. Thank you so much for tuning in.